Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CENTESSA Pharmaceuticals PLC quarterly report. CENTESSA Pharmaceuticals provides a range of businesses and services, including developing medicines for various conditions, conducting clinical trials for its lead programs, such as X750 for idiopathic hypersomnia and narcolepsy type 1 and 2, researching treatments for neurological and neurodegenerative disorders through its development of Zone 100 and 42, investigating potential symptoms, including excessive daytime sleepiness, impaired attention, cognitive deficits, and fatigue, developing a treatment for neuropsychiatric disorders with X489 offering lock body, a product designed to selectively drive potent effector function activity into the tumor microenvironment. The significant increase in CENTESSA Pharmaceuticals PLC's stock price over the past year can be attributed to a combination of factors. The company's promising drug pipeline, particularly its orexin receptor 2 (OX2R) agonist program, has garnered strong investor confidence and positive market sentiment. Key news events have contributed to this surge, including the release of positive clinical data for X750 in participants with narcolepsy type 1, 2, and idiopathic hypersomnia. The FDA clearance for Zone 142 also provided a boost to the company's stock price. Furthermore, favorable analyst coverage and price target adjustments from prominent firms such as Stephens, Oppenheimer, and Wells Fargo & Company have reinforced investor confidence in CENTESSA Pharmaceuticals. The anticipation of a registrational program for X750 and patient studies for Zone 142 has further fueled the increase in stock price. Overall, the combination of strong clinical data, regulatory approvals, and analyst endorsements has driven CENTESSA Pharmaceuticals PLC's stock price to reach a 52-week high of $25.35 USD. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Firstly, license and other revenue play a significant role, as seen in the $15,000 generated in $9 million 2025 compared to $0 in $9 million 2024. Additionally, upfront payments from partnerships, such as the $15 million received from Genmab in 2025, contribute substantially. Potential payouts from development, regulatory, and sales milestones can also significantly impact revenue growth, with up to $234 million per product possible. Furthermore, tiered royalties on annual global net licensed product sales provide a steady stream of income, estimated to be in the mid-single digits. The successful development and commercialization of current or future product candidates, such as Zone 142 and X489, are crucial for driving revenue growth. Out-licensing of technology platforms like LockBody can also generate significant revenue. Lastly, regulatory approval of product candidates is essential for unlocking these revenue streams. Net income has experienced significant fluctuations. Initially, it decreased by $1.12 billion, but later increased by $6.9 million. However, net income has been negative since inception, with a loss of -$131,369 in one instance. The decrease is attributed to increased research and development expenses. Profit margins have also declined due to various factors. Increased general and administrative expenses, higher research and development costs, and decreased license and other revenue have all contributed to this decline. Furthermore, the company's inability to generate revenue from acquired intellectual property has exacerbated the issue. As a result, profit margins are expected to remain low in the foreseeable future, potentially decreasing due to downward pressure on prices from healthcare reform measures and cost containment initiatives. The company's financial performance reveals a concerning trend. Despite efforts to improve its operations, the company continues to struggle with generating positive operating cash flow. The data from both 2024 and 2025 periods shows a negative operating cash flow, with a significant decline of $38,755 in 2025 compared to the previous year. This persistent issue raises concerns about the company's ability to sustain its operations and invest in growth initiatives. The company's debt level has undergone significant fluctuations over the past year. Initially, long-term debt remained steady at $108,940 on page 5. However, a loan of $110 million received in December 2024 caused an increase in debt level to $109,000 $816, page 43. Fortunately, this was followed by a substantial repayment of approximately $110 million, resulting in a decrease in debt level, page 55. Regarding interest expenses, the information is somewhat inconsistent. On page 40, it is reported that interest expense decreased from -$2,557,000 to -$2,890,000, representing a 13% drop. Conversely, on page 43, interest expense increased by $1 million from 2024 to 2025. Despite these conflicting reports, the overall trend suggests that interest expenses have not changed significantly, with some instances of decrease and others of increase. Performance overview. In the recent financial summary, two key segments stood out. The license and other revenue segment showed significant improvement, increasing from $0 in 2024 to $15,000 in 2025. On the other hand, the operations segment struggled, recording a loss of -$131,369 in 2025 compared to -$124,428 in 2024. The company's management is emphasizing caution in its outlook and strategy. Despite a focus on treatments for various diseases, there are significant risks and challenges that could impact commercial success. Regulatory risks, market acceptance, and financial risks are major concerns, as well as the need to retain key employees and attract new talent. Management is taking steps to mitigate these risks through careful management of trade secrets and proprietary information, monitoring patent landscapes, and limiting potential lawsuits. However, uncertainties related to tax laws, geopolitical tensions, and PFIC status remain a concern. Overall, the company's strategy is centered on prudence and adaptability in the face of uncertainty, with a focus on navigating regulatory, market, and financial risks to achieve long-term success. Acquisitions and divestitures overview. Our company has been actively involved in strategic business moves through acquisitions and divestitures. On the acquisition side, we have made significant investments in discovery or development stage assets and programs through in-licensing agreements. Additionally, we have also made notable announcements of major acquisitions by ourselves and our competitors. On the other hand, we have also engaged in divestitures to optimize our business portfolio. One notable example is the limited out-license of our lockbody technology platform to Genmab for up to 3 targets earlier this year. This strategic move allows us to focus on core areas while generating revenue from non-core assets. The company has not paid dividends in recent years and does not plan to do so in the near future. This is due to loan agreement covenants that restrict dividend payments. Additionally, there are no current plans for share buybacks, although this option remains subject to certain conditions. Supply chain disruptions pose significant concerns. The financial summary highlights several concerns regarding inventory buildup and supply chain disruption. Manufacturing delays due to regulatory inspections, equipment malfunctions, facility contamination, and raw material shortages are potential issues that could lead to disruptions. Additionally, problems in contract manufacturers, CMOs, supply chains, manufacturing processes, or facilities may result in delays and increased costs. The unavailability of suitable raw materials and components is another concern, as well as the impact of geopolitical conflicts, changes in trade policy, and natural disasters on the supply chain. These risks underscore the need for companies to develop contingency plans and diversify their supply chains to mitigate potential disruptions and ensure business continuity. That concludes the financial summary for CENTESSA Pharmaceuticals plc. Feel free to comment below, and I will be happy to answer them when possible.